Welcome, everyone. In today's video, we're diving into an interesting comparative analysis, using a simple napkin calculation to examine the profitability of battery swapping and contrast NIO's approach with Xpeng's. The reason I'm specifically comparing these two brands is due to the ongoing excitement surrounding Xpeng, especially after the success of its affordable model, the Mona M03. The model has gained significant traction, with thousands of units hitting the market, which is quite remarkable. However, despite this, I personally have greater confidence in NIO's future over Xpeng's, and I'll use this analysis to illustrate my reasoning. That being said, my perspective is just one viewpoint. You should always conduct your own research. Still, these figures, though simplified, could offer some valuable insights. Let's begin with an overview of Xpeng's Mona M03, which is designed as a cost-effective vehicle. Having seen the Mona in China, I must say that while its design isn't necessarily to my taste, the interior is impressively crafted. Since the release of the G6, Xpeng has demonstrated notable progress in vehicle development. One downside of the Mona, however, is its compact interior space, a stark contrast to NIO's Onvo series, which offers a much more spacious experience. Nevertheless, consumers seem to appreciate the Mona, particularly in Southeast Asia, where Xpeng's sales are booming. Now, looking at the financial aspect, the Mona M03's average sales price ASP is around $18,000. With an estimated vehicle margin of approximately 3%, Xpeng is making about $540 in profit per unit sold. This profit must cover other expenses, including marketing, research and development, and overall operational costs. Given Xpeng's current monthly sales of around 16,000 units, if this momentum continues throughout the year, the company would generate roughly $100 million in pure profits from the Mona M03. However, these profits must then be allocated toward broader expenses, meaning that whether or not the company actually turns a net profit remains to be seen. This profitability potential has fueled investor enthusiasm around Xpeng. The company's rapid revenue growth and the possibility of achieving break-even or profitability make it an attractive prospect. Additionally, there's another significant revenue stream within Xpeng: the partnership with Volkswagen. Volkswagen's investment, holding approximately a 5% stake in Xpeng, has led to a collaborative effort where Xpeng is helping Volkswagen produce certain models based on Xpeng's older platforms. This partnership has financial benefits as well. In one quarter alone, Xpeng recorded approximately $140 million from Volkswagen's fees. While not entirely profit since there are engineering costs associated with these projects, it's still a lucrative revenue stream. Even if we assume that roughly half of this sum accounts for expenses, the remaining profit is still substantial. Importantly, the revenue from Volkswagen surpasses what Xpeng expects to generate from the Mona M03 over an entire year, assuming the margin remains as predicted. Considering this, Xpeng would need to sell at least 260,000 Mona units annually to match the revenue brought in from Volkswagen's partnership. This illustrates how reliant the Mona project is on large sales volumes to be financially viable. Given these figures, some might argue that Xpeng could find it easier to focus on research and development partnerships rather than expanding its lineup of low-margin vehicles, especially considering that research and development work incurs fewer challenges compared to scaling up vehicle production. Now, shifting our focus to NIO and its battery swapping model. One of the biggest critiques against NIO is that battery swapping is costly and impacts profitability. The heavy research and development and capital expenditures (CapEx) required for infrastructure development have led to skepticism. However, when we examine the numbers, we get a clearer picture of the potential future profitability of this approach. Currently, NIO has over 3,000 battery swap stations. According to available data, around 60% of these stations have reached break-even levels. A station becomes profitable at approximately 200 swaps per day, with the ability to perform up to 350 swaps daily, depending on the generation of the station. For a simplified calculation, Let's assume a scenario where a station completes 220 swaps per day instead of the break-even 200. At this increased utilization, assuming a $15 profit per swap, those additional 20 swaps per day would generate over $300 million annually in profits. This revenue can be channeled toward covering NIO's research and development, marketing, and operational expenses. In comparison, this amount is greater than the revenue from Xpeng's Volkswagen partnership and significantly higher than what Mona is projected to earn annually under the given assumptions, potentially 3 times more. This is an eye-opening realization because a minor increase in battery swap station utilization just 3% above the break-even point can significantly boost NIO's overall profitability. What's even more exciting is that as battery swapping adoption increases, it creates a network effect. The more drivers opt for swapping, the greater NIO's profitability, allowing the company to reduce vehicle prices, which in turn attracts more customers. This cycle leads to greater adoption among partners, resulting in increased revenue streams from swap fees. And all of this growth occurs without requiring additional investment in personnel or extensive research and development collaborations with external automakers like Volkswagen. From an investment standpoint, this creates a compelling case for NIO's business model. If the company can successfully demonstrate the profitability of battery swap stations on its financial statements, investor sentiment is likely to shift positively toward this aspect of the business. Unlike traditional automakers focused solely on vehicle sales, NIO's ecosystem-oriented approach, where battery swapping plays a pivotal role, has the potential to create long-term competitive advantages. In summary, while Xpeng's Mona M03 is making waves in the market and holds promise in terms of sales growth, the profitability margins remain relatively thin. Meanwhile, Xpeng's research and development partnership with Volkswagen provides a more stable revenue source, but it also suggests that vehicle production might not be Xpeng's most sustainable long-term focus. On the other hand, NIO's battery swap network, despite heavy upfront investments, showcases immense profitability potential, especially as utilization rates improve. With this perspective in mind, it will be fascinating to see how both companies navigate their strategies moving forward. That wraps up our discussion for today. If you found this analysis insightful, be sure to like, comment, and subscribe for more deep dives into the EV market. Let me know your thoughts. Do you think battery swapping will become a game changer for NIO? Or do you see Xpeng's strategy leading to greater success? Thanks for watching, and I'll see you in the next video.